All right, everyone, welcome back for another episode of Carnivore Trades. Today is Thursday, September 29th, 2022. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, so the red flag scenario that I talked about yesterday has, in fact, played out almost exactly the way I kind of laid it out. And so around, 3:30 p.m. yesterday, I said, you know what, we probably, we're going to get above this level here on the spiders. And, barring a meltdown in the last 10 minutes, we should be able to close above it. We had a meltdown in the last 10 minutes, and I said in the video yesterday, it doesn't look like much, but that's very significant to me. And that leaves the door open for a gap down and a flush tomorrow. And that's basically exactly what we got here today. And really what I'm looking at right now as far as like correlations and so on is we've repeated this pattern in late April, early May so far, pretty much to a T. So we had this big wave up here, the short squeeze, everybody remembers it. After this big move down, we made a slight higher high, and we came down, small little inside bar bounce, down another inside bar, and then it failed the breakout, and then we came down here. And the way that we chopped around in this period is almost exactly how we've done so currently. So, we came down, we had a little reversal, like tail candle, test, another test candle, and then an attempted breakout, and then we came back down very sharply the next day. And here, it's, the same thing. Big outside wave, big short squeeze, higher high, slight higher high, 1, 2, 3, inside bar down, bounce back up, couldn't break out, came back down, tail candle, test candle, and then a failed breakout, and now we're making a new low here. Today it'll be interesting to see if we close at the lows. If we do, it would be almost identical to this candle, right? So we had this move up, and then we gapped down the next day and came right down. So that would imply that tomorrow, by the way, tomorrow's end of quarter, so there's going to be a lot of window dressing, undressing, a lot of shenanigans going on tomorrow for sure. If we put in a low on the 30th tomorrow, maybe close green, we could get a pop next week, and then it'll be very, very important to watch this level again, 370.62 on the SPX. It's 37.27 and change, 37.27.14, I think is the actual level, but it's not that important right now. But that's those levels. That's what we want to see. If we can get above that, then I think that we probably have a rally coming in place for maybe a week or two. But ultimately, I do think we're going to head lower. If that level holds, then this market's, probably going to go down very quickly, and we'll see probably a repeat of this level. And this is all just contingent on, this exact little pattern here playing out. But it's definitely noteworthy when I see something that tightly correlated. It's very hard to ignore. Now we are starting to get a little bit of a bid here in the last half hour or so. So maybe it's going to reverse a little bit. We got to be, this is again just assuming, and it's never going to. Pattern's never going to repeat perfectly. It's history repeats. It doesn't repeat, it rhymes, right? So just little things to keep an eye on here. But the important thing was, you got to watch those levels. And really, that was a red flag yesterday to me, that we didn't close above that level. And we had every chance to close above that level, and we still couldn't, by about 10 cents too. I mean, it was right there for the bulls. And right now, bulls are weak. So I definitely have to respect that. We did make a new 52-week low today. We'll see if they save this. So we have not closed below 362.17 yet this year. So they are trying to save it up a little bit right now in the last half hour. We'll definitely check back in on that as we get closer to the close. But, bottom line is that red flag yesterday definitely played out here. And this market is still showing signs of weakness. Now, maybe they, push it up here. Maybe this was a bear trap. I think the best chance for a bear trap, though, yet was, earlier this week, that I was saying, like, hey, look, there's too many shorts in here. They should probably, be careful about shorting in the hole because we could squeeze up. And we had the chance to get that follow through yesterday. So I think it's a little bit odd if today was the bear trap, because you had them trapped earlier this week and you had a chance to push it higher. Why do you need another kind of fake out? I don't know. But either way, bottom line, market's weak. We're stuck in this range. A break either way probably determines our direction. But for right now, market is soft, and that definitely needs to be respected. Now, don't advocate shorting down here, because you're risk reward is very poor at this point. So I'm personally looking for a bounce here. I'm just holding my main core short position, which isn't a huge one, but it's what I've had from, basically this whole leg up here when we started shorting in August. But for right now, for me personally, I need a bounce here, like a significant bounce, not just a 1 day bounce like this, but actually a counter trend move, at least for a few days before I get interested, just because of how much risk you'd be carrying shorting down here. But anyways, triple Qs here down a little bit more. So again, showing weakness now. The NASDAQ, let's take a look here. I don't have this drawn on, but that low got tested today. So the NASDAQ finally got down to double bottom, and maybe that's the reason why we're bouncing now. We did put in a little bit of consolidation beforehand, so this level is a little bit more minor, but for what it's worth, it's holding up right now. Again, end of quarter tomorrow. We'll see what we get here. But triple Q's an outside day there, down 3.2%, whereas the spiders down just 2 1/3 right now. And we're starting to back check that level there. So 362.17 on the spiders. We'll see if they close it below that by the end of the day here. But NASDAQ a little bit on the weaker side there. Russell 2000, which was the strong horse yesterday. Remember I said, the Russell, the IWM here, actually closed above. We can get this up. Yeah, so Russell actually closed above that Friday high there yesterday. So that was kind of your best, really, that was really like the bull's best chance of a rally coming up today. And obviously that got faded again. So Russell down 2.5. But again, right back to the lows there. It is not making a new 52-week low, though. So that is also a small positive there. See, the Russell is upticking here in the corner of my screen currently as we get closer to that 345 time frame. So trying to hang in there, and again, this is probably the best thing the bulls have going for them, is that small caps are holding up from a relative standpoint here. We are getting a little bit of a bid here across the board from what I can see in most of everything on some of my other screens here. But yeah, bottom line, pretty good fake out here today with that gap down. Anyways, semiconductors via the SMH here down 3%. New 52-week lows there. Again, tech leading to the downside, never a good sign. We are coming off the lows here, but again, just the fact that we made new 52-week lows, and we may even make new 52-week closing lows. In fact, we probably will here today, unless we get back above 190.13, which is a long ways away there for the SMH. But again, semis not showing leadership, which is not a good sign. IGV also taking a good hit here today. Still inside of yesterday's candle, though, unlike the SMH, but in all fairness, this has been beat down more than the SMH, so it's already kind of seen some of that downside, but it is down 1.7% today. Dow Transport's actually trying to bid back up here a little bit in the final half hour. Again, inside candle. We had a nice little pop yesterday, outside day, but again, gap down today with everything else, so that definitely needs to be respected here. Interest rates. So 10-year actually coming up here, and sorry about this thinkorswim lag here, but getting a little bit of a bid here, nothing crazy, just a little inside candle from yesterday. The thing that's noteworthy, and I usually save the dollar for a little bit later, but it's all about the dollar right now, and we're seeing the dollar pull back here, and rates are actually holding up. But again, one of the themes that I've been talking about lately is with the dollar pulling back, that's good for US stocks, but it's also good for commodities. And we're seeing gold right now actually start to bid up here and recover. You see the GLD there coming back, and it's actually scratching back to the flat line now. So the dollar index not really giving yields that much of a, yields are holding up here in the face of the strong dollar, or in the weaker dollar. Over the last day, you see the 2-year is still negative, but has a little inside candle there, so it could push up tomorrow. But we're seeing a little bit, and I was just telling my members, I think we're close to kind of a dynamic shift here. Maybe not quite yet, but where we've been dominated pretty much all year by a strong dollar rates up environment. And I think some of that may be about to change here, but it's maybe not quite ready to take place, but we're starting to see sort of cracks of it. And I think we need to have that washout, that final washout in the equity markets before we can see that happen. But for right now, it is noteworthy. I told you guys that 114 level would be a speed bump. Bottom line, we're pulling back off of that. Rates are still hanging in there. Again, we'll kind of look for around 110.75 for a pullback. Maybe it gets down to 110, and then you'll have a major a lot of more support around 109 there if it were to get there. And then you have that trend line 50 MA upsloping as well. So we'll see if that happens. But so far, the weaker dollar has not really helped the market today. We are coming a little bit off the lows here, but again, it's also a tailwind for commodity prices. So we have to pay attention to that dynamic. Anyways, home builders here, XHB. Again, looks like everything else here, gap down 3%, an inside day, all things considered, but it is taking a hit. ITB as well, and the VNQ here, another 52-week low. So this is basically got down to like the low range of my target. So 78.73 was the actual low print today. So this has satisfied that head and shoulder pattern target there. You can see right there, perfect pattern and nice break, perfectly to target. So that is now satisfied the downside. Doesn't mean it can't go down a little bit lower here, but I mean, it's wickedly oversold, and it has, begun it has satisfied the downside target. Plus, we have end of quarter coming up tomorrow, so that could, coincide with a little bit of a relief possibly for this. But what a fall there on VNQ, was at 102.50 in the middle of August, and so about 5-6 weeks from now, it's all the way down to 79. So pretty big move there for real estate. Not a good look, all things considered. XLF here, financials, not making new 52-week lows, down 1% on the day. But again, just kind of chopping in this lower range. And, the more it does this, the more it can start to look like a bear flag here. So we'll definitely keep that on the radar. XBD, same exact thing here. So you came into the support level and you're not bouncing off of it. It's a dead cat bounce, or we're just going sideways. So again, if this starts flagging more, this can get lower and go a lot lower here. And again, ultimately 400s are going to be really your next big level. If you get through that, it's back to 380. So those are the levels there on the broker dealers. Moving on to energy. So crude, a little bit of an inside candle here, down just 80 basis points. So not a bearish candle, but right now what you want to watch for here is this 20 MA. Can we get above the 20 MA, and can we get back above that yellow trend line there? So if we can't do either of those things, then we might get that flush down to the low 70s after all, which at that point I'd probably be buying with both hands. So I'm actually rooting for that to happen here. We'll see what we get on crude. So far, just a little inside day, but that's going to be your level there. And then obviously tomorrow, the weekly and quarterly close will be very important on crude. But we do have a nice weekly candle here on crude so far. Again, I said it basically just defended that 100 moving average yesterday, and we'll see what we get by the close tomorrow. But so far, that doesn't look too bad in my book. All right, XLE. Again, still stuck in this range here. It is green, though, in a down market, so that is to be respected here. But until you get above 72.90, this is still under a little bit of pressure. And then obviously your resistance would be up to, 75.70, which is your gap fill there. And then you got all those moving averages, and then, back testing this lower trend line. So somewhere up in that range would be your target for XLE if it were to push up. XOP, little inside day there. Again, same area on the chart here, 130 and then 135 with all those MAs up there. OIH, and again, OIH, same kind of thing. Sorry about the lag here again. Thinkorswim's been kind of touchy today, but here we go. So 213 is your area to get above, and then obviously the gap fill. So really the same chart here across the board. Nat gas actually continuing to kind of hold up here, and again, could be putting in sort of an inside pattern here. Again, I do not like that 630 area, so this is setting up a bear base potentially, unless you break out of this range and you can get back above that 20 MA. But right now, it's kind of just stalling here and could be setting up a bear base. So we'll definitely watch for that moving forward. We talked about the dollar already. The dollar index obviously pulling back off the 114 area. So we're looking for about 110.75 and then 109 here on the downside. And again, apologize for the lag here. One of those days with Thinkorswim here. It's been like this all day for me, so apologies there. Yeah, now we're getting the late volume in, but either way, I can show you on the screen here. So basically, we're getting coming off the lows here with the dollar coming in. There's gold finally. Okay, there we go. So apologize for that. Gold getting a bounce off the lows with the weak dollar. Again, still needs to get above that 20 moving average here. and above 1675. Looks like it's trying to do that right now. I still think there's a possibility for one more flush in gold. You see silver here also hanging in there on the daily. I want to watch pattern on this. But I do think that gold is getting close. And what I was saying earlier about the, different sectors that are, different sectors and different correlations that we've been used to all year coming to a change. Gold is one of those things that I think will start to change and start to lead. And right now, today, in a down market, we are seeing a little bit of a move to risk off, which is why gold is holding up so well. And in fact, GDX is actually nicely green today. So we're seeing the miners outperform as well. And it's basically trying to get back above that 20 moving average. We're just below that gap fill at 23.74. And this has had a nice pop in the last half hour here on GDX. So again, metals and miners starting to show a little bit of relative strength here. And again, I do think that will start to be more so the case as we kind of go through this next cycle here. But anyways, copper up 2% as well. So again, liking the weak dollar there. Trying to put in a weekly higher low. Again, we talked about that 331 area that was defended. So it looks like that is good. We'll have to wait for tomorrow's close. If they could push it right back down tomorrow, but that is getting defended right now. So that is a positive there for copper, and we'll just keep an eye on that in the meantime. As far as the coins are concerned, nothing really has changed here. Just kind of stuck sideways in this range. Bitcoin and Ether basically flattish. Although, for what it's worth, still showing a little bit of relative strength on a short-term basis. They're flat in a down market. So we'll give it that, but ultimately, again, I keep saying to you guys, this is ultimately a big bear base here on the bigger time frames. You see the monthly there. Let's go to the weekly, actually. So there's the weekly on Ether, and then Bitcoin, even much more weaker there. Look at that big inside bar there. So that definitely needs to be respected. Anyways, guys, let's flip back over here. So Spider's kind of just hanging in this area. Looks like they're going to try and close it right near that level. We'll see if they push it below. We've got about 15 minutes left in the day. Market's hanging in there. It did come off the lows, so it does lead me to believe that they'll try and save it here before the close tomorrow. But we'll see if we get that one candle tomorrow with sort of a flush here. So we did have the, if today's candle is right here, then that would kind of imply that we'll test lower prices tomorrow and possibly close green. And then maybe we could get a rally into early next week. So we'll see what we get. But that correlation is something I'm definitely keeping my eye on moving forward. All right, guys, I'm going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you all tomorrow.